This lesson covers setting up investments in the UAN accounting system. Please turn to your new client handbooks, page 31, investment maintenance. All right, I'll start just by reading the first line of the overview. An investment is a treasury bill, certificate of deposit, or other type of interest-bearing account held at a bank or other financial institution. Okay, so it falls into one of those three categories. A treasury bill, a certificate of deposit, or some other type of interest-bearing account that's held at the bank or other financial institution. I guess I could add to that, that is not your primary checking account, because we know your primary checking account can gather interest. Well, it's not an investment, it's your checking account. So we go to, I've got a few things open on the software here already, but and here's the investment maintenance screen. The menu path to get there is to you select accounting, maintenance, and your investments are set up under the investments maintenance area. In our example, sorry about the misspelling, we've got a number of misspelled things here in our data set, but currently we have 4 open investments. And so you can see them here on this list. And let's see, we also have, I guess I'd like to take a few moments to discuss the distinction between the different accounts that you can have set up in UAN. You can really have 3 main types of accounts set up in UAN, and the reason I had those reports open is that it's kind of easy to see this in the fund status report. That's one of our Big 6 reports. So if I go to accounting reports and statements, we'll see this a lot today, fund reports and the fund status, and I select all of my funds. We can kind of see the different types on this report. Remember, the fund status is a snapshot at a point in time of your cash balances, not budgetary, but actual cash balances in any particular fund. And this, these column headings calculate a little bit counterintuitive. They calculate from right to left, or normally the way I think is I go from left to right, but this is the one report that's a little bit different. This column plus this column equals your fund balance. So it's a long description, but basically your checking and what we call pooled investments, which I'll elaborate on that in a few minutes, is summed up here for each fund. And then the total of all of your investments that are what we call non-pooled are summed up in this column, the total of which equals your total fund cash balance in each fund. So this is your bottom line cash balance for each fund, regardless of which account. Now on this report, it's nice because you can see the 3 different account types. You have investments, secondary checking accounts, and your primary checking balance. Now some of you may only have a primary checking account balance. You have one account that you deal with. You have no investments, whether they're pooled or non-pooled, and you have no secondary checking accounts. It's just one checkbook and one account and nothing else. If that's the case, honestly, for this section here on investment maintenance, if you feel that you're in the near future or not so distant future, you will not be adding any investments at your entity, you won't be opening any other accounts at banks for investments, then you can pretty much skip this lesson and move on to the I think our next lesson is in transactions. Yeah, purchase orders. So you feel free to stop now and move on to that. But for the rest of you, if you have some investments, or for a few moments we'll talk, if you don't have investments, if you have a secondary checking account, I'm going to add a little bit to the book here that's not in there and talk about the distinction. So you can set up, and everyone's got to have the primary checking account, as I mentioned before. And in UAN, all of your receipts and all of your payments will flow out of your primary checking account. So your cash in and out decreases and increases. Ultimately, this fund balance here is going to decrease or increase based on cash transactions that you have in the primary checking account. Now, indirectly, you may transfer some money. You may actually, in reality, cut a check out of your secondary checking account. But in UAN, that would not. It would be handled, as we mentioned before, a little bit differently. It would involve transferring it first to the primary checking account, then recording some kind of electronic payment so that it would reduce your checking balance and your fund balances. But everything happens, the increases and decreases to cash ultimately occur through the primary checking account. So you may have these other accounts, an investment or a secondary checking account, and regardless of whether it's pooled or non-pooled investment, we'll just talk about investments in general versus secondary checking accounts. The question we get sometime here at UAN Support is, when I'm converting to the new software, should I set up these particular accounts as either investments or secondary checking accounts? And really, there's not a hard and fast rule for that. Now remember, the secondary checking accounts are set up here in the maintenance section as well under checking accounts. And we talked about this in an earlier exercise. Here, I set up this grant account as a secondary checking. And I promised I'd talk about this later when we got to investments. So now we've arrived at that point. Well, it comes down to really three considerations. When you look at these additional accounts, we're talking about a number of questions you want to ask. Availability. Is the cash immediately and readily available? Another question, how long will the cash be tied up, and should it be separate from the other cash? And then finally, your transactions. Will there be many transactions against this account in a given period of time? So for instance, if you have, like in our example, maybe you've got a grant, some grant money, and part of those requirements is that it should be in a secondary, it has to be in its own checkbook, even though you're separating it by funds and so forth. As part of the requirements of some grant, you have to have it in a secondary checking account. Well, that would be one reason you would have it, and the second, you would set it up as a secondary checking account. And I guess that gets to the question of how long is the cash immediately or readily available? Well, maybe this money is immediately available, so I can write a check out of my grant account. Now, again, it'll eventually, in UAN, it'll flow through the primary checking, but maybe you're writing, 20 checks a year out of this account, or 50 checks a year out of this grant account. That would be a case where you would not set it up as an investment, even though maybe it's an interest-bearing account and it has a checkbook. If it has a checkbook and you're recording a lot of transactions in a relatively short period of time, then you would not want to set that up as an investment. Technically, you could get away with it and you could manage through that, but it would make more sense to set it up as a secondary checking account. On the other hand, maybe you do have, for instance, like a money market checking account where the interest is recorded. You get a better interest rate, but it's very rare that you have any kind of transaction other than interest receipts on this account. Maybe once a year you might actually write a check out of this. Well, then it would make more sense to set that up as an investment. you're not performing many transactions on this. With this, it's interest bearing. You're basically just posting the interest receipts. That would make sense to record that as an investment. Another one of the questions we mentioned, what if this cash is not immediately or readily available? Well, but you have the capacity to write checks using this account. Well, yes, you could set it up as a secondary checking account, but let's say it's a 10-year or a 5-year certificate of deposit. Well, it's not immediately available, and it's basically that cash is going to be sitting there for a long time. So that's really an investment. You would set that up as a CD. Again, technically, kind of in the software would allow you to set that up as a secondary checking account, but it wouldn't really make sense to do so. So those are the general principle guidelines you want to follow in whether deciding whether your account should be a secondary checking or an investment. I mean, if the account has absolutely no checkbook and so forth, then if it's there for the purpose of gathering interest, a better interest rate than your primary checking, then that's a clear example of something that would be an investment. All right, so I'll discontinue the checking account discussion there, and let's move on with investments. Maybe we'll look at this fund status again now. So you can see in our example we have no secondary checking accounts, so it's zero balance. Notice that the checking accounts are pooled. So that means it combines it, well, actually we'll talk about what's pooled, not pooled in relation to investments, but it combines all the cash together in the balance. Now here we do separate the secondary checking as a total for your entire cash balance, but per fund it's just all pooled. You don't separate it out by fund. We'll see how that works primarily through the investments. So this column is for checking and pooled investments. Pooled checking and pooled investments. All checking is pooled. Investments can be pooled or non-pooled. So that brings us to our highlights, which is not on that page. It's not over here. An investment must be accurately marked. Zoom in on this a little bit here. Let's see. I'm going off the page. There we go. An investment must be marked pooled or non-pooled on the investment form. This setting cannot be changed once you save the investment. After that, the only way to change it is by closing or removing the investment. We'll take a look at that. The setting affects the cash available in each fund and the cash reports, such as the fund status. Okay, so this is an important setting we're going to see. And let's take a look at that, some of our investments first before we go through our exercise. Well, I'm going to select all the investments, and then we'll take a look at them under the display screen. Actually, let me take that back. We'll look at them under the edit screen. These are our current investments in this township. So again, we're assuming that we rolled from, we're not assuming that we're converting here. These investments existed as of January 1st. They were in 2011 and 2010. This Buckeye Township was already on the UN system. And they had these investments. Well, here we have one for the sewer replacement fund. And here I can see that we have a typo here, so I'll correct that. It's replacement investment. And there's a lot of information here. We'll discuss the details in a moment. But you can see this checkbox is what that first highlight is about. It's a plus. You can either fill in or clear the checkbox. This is an existing investment, and notice it's grayed out. So when I first added this investment, I had a choice. I could have marked it multiple funds pooled, or I could have, which would mean filling in the checkbox, or leave it blank, meaning that this investment does not include pooled. This is not a pooled investment. It's a non-pooled investment. So remember our fund status report, we have non-pooled investments versus pooled. All right, so notice there's a little question mark next to that, so we can click on that and get some more information. This information is also in our on page 31 under highlights. It says only uncheck this box for the investments that fit the following criteria. So in other words, it's non-pooled if it fits this criteria. Only a single fund will be invested in this investment. So it only involves one fund, it's cash amount. That fund is legally permitted to receive its own interest. So if the fund's not allowed to receive its own interest when you post interest receipts, it can't be a non-pooled investment. But if it's legally permitted to receive its own interest, then it may qualify as a non-pooled investment. You may qualify to use that fund, this single fund, in a non-pooled investment. That fund is marked in the funds area to receive its own interest. Well, that's jumping back to one of the second or third lesson that we went over. We went over fund maintenance, and we had a little checkbox there that indicated whether that fund could receive its own interest. So these two are related. This is basically saying it must be legally permitted, and here it says it must be marked that way in UAN. This box must remain checked. In other words, multiple funds or pooled investment for any other circumstance. And this setting cannot be changed for investment after it has been saved. All right, well, this investment is a non-pooled investment because the checkbox is clear. And we can see at the bottom of the screen, you can ignore the rest right now, the investment balance currently has a $200,000 balance, and it's all out of one fund, the sewer replacement fund. So I'm going to save that because I made a little change to the description. And then it advanced to the second investment. This is also a non-pooled investment. It's a bequest, a permanent fund. Actually, it uses this permanent fund, money from the permanent fund. So I'll move on to the next. This one, notice there's no fund listed. This is a money market account. Money market, money market key. Money market account. And it is marked with a checkbox as a pooled investment. So we do not designate the fund. Basically, it's cash. This $5,000 is from cash from all funds. Okay, it's just all pooled together. It doesn't. You don't specify a specific fund that it comprises that. So I'm going to save that change. It moves on to the next fund, our last one, which is the Star Ohio investment. Currently a $10,000 balance, and again, it's multiple funds pooled. So it's not, the checkbox is filled in. So this is a pooled investment. All right, so if you recall, under maintenance funds, that's where we set up the designation for our funds. And for instance, if we look at that sewer replacement fund, well, that's grayed out, and it must be per the chart of accounts. This fund has to receive its own interest whenever you post interest receipt revenue for this revenue from a investment in this fund. That money will go back to the interest account if it's reinvested. If I look at that UN bequest fund, that permanent fund, I can see that it's also marked. Actually, I should take that back. This one, it's permanent fund. You might have a choice, but once you actually post or make some kind of change to that fund, or add it to an investment, I should say, then it's set. This setting is no longer, you're no longer able to change that setting. But we can see that, okay, that qualifies for non-pooled. So in our investment, we saw that UN bequest CD was set up as a non-pooled investment. Sewer replacement was set up as a non-pooled investment. The other funds are may or may not be set that way, but the point is that they have to be. Now remember, we set up the Hayes bequest, and that's part of our Buckeye Township story. We got a donation, $10,000 for the beautification of Woody Hayes' gravesite. And so we got that money, but we, in the first, in the fund maintenance section, we set up that fund. And remember, we marked it as receiving its own interest. So that's what that criteria, page 31, says, is that the fund must be marked to receive its own interest. Once you have some activity on this, posting interest, then you're not going to be able to change the setting in here, so be aware of that. But to set it up as non-pooled, you have to have the fund that you're using marked to receive its own interest. And we're going to actually record an example of that Hayes Bequest Fund regarding the non-pooled investment. All right, so that kind of gives us a little bit of a start. I know this is confusing when you first look at it. We've talked about what does it take for an investment to be considered non-pooled. Here's an example. A common non-pooled investment is a private purpose trust investment where the interest is posted back to the private purpose trust fund. Another one we saw was that permanent fund for the UN bequest, or we'll see the Hayes bequest for the cemetery bequest is going to be the interest will post back and be reinvested in that fund. All right, pooled investments. Well, pooled investment is an investment that has its cash combined, so that's a key word, kind of synonym with pooled. It has its cash combined with the total cash of all funds, with the exception of non-pooled investment cash. So the cash is combined or pooled together with the cash of all funds. You don't distinguish a fund when you set up a pooled investment. Interest can post back to all fund balances that are permitted to receive interest when you set up a pooled or a multi-fund investment. Examples of common pooled investments are money market investments or Star Ohio investments would be two good examples. All right, another highlight. Investment maintenance is separate from investment transfers. We'll get to that investment transfers when we do transactions, when we talk about transactions. But what we're doing right now is just setting up the investment account information and marking some key things like whether it's pooled or non-pooled. All right, number 3, pooled investments do not have the fund distribution option. We've already seen that with some of the pooled investments. It doesn't show, it's not something that you designate on the screen. Investments with no activity in the current year can be removed. This includes investments that were closed in a prior year. If they have activity in a current year, then you can't remove them, but you can deactivate them. So we saw how that works with account codes. The same is true with investment accounts. And as we saw in the fund status, non-pooled investments are grouped separately on reports such as the fund status and the cash summary by fund. Those are 2 of our big 6 reports. So going back to that, here again we saw our non-pooled investment. I pointed out the sewer replacement and the UN bequest funds. We have 2 investments set up. Now this is a summary. We could have multiple investments. It happens to be just 2, but this summarizes, all of your investments per this fund. So these are our two non-pooled investments, and we can see that that's separated out from our, even though we don't have secondary checking accounts, that's separated out from our primary checking account balance. So thus the difference between 236,800 and 221,800. Let's see here. Yes, it's separated out because the total fund balance is 441,800. So it's separated out at that point, and then the pooled investments are distinguished here between the difference between 236,800 and 221 is your pooled investment amount. All right, so let's look at some actual examples. Under investments, our first exercise on page 32 is to add an investment. It says in this exercise we'll add an investment for the Hayes Bequest Fund. So that was part of our township story. So we click on Add, and it opens up this Add Investment form. Well, here you have to key in a name for an investment. The investment name is unique, and the number has to be unique. The number can be changed after you save this investment. The name cannot. So make sure you put in a meaningful name for this, because you're going to have to pick this from a list of investments later on. And so if you have many investments, you want to have something that's meaningful related to investment. So we're going to call ours just Hayes. And then we'll put in our actual bank account number for this investment. So we have a number here. Excuse me. Assume this is from the bank. And then this investment is going to be a non-pooled investment, so we're going to clear the multiple funds pooled checkbox, indicating that it's non-pooled. Then we need to put in an investment description. We're going to describe this as the Hayes Bequest Fund because it's non-pooled, so it's only going to involve that fund, so that's not a bad description. And then this is where we decide, is this a treasury bill, a certificate of deposit, or basically any other type of financial utility for investment utility. So we'll mark this as other. Below that, under details, well, I'll return to this when we get to receipts, but this is basically just a convenience feature. When you go to post your receipts, you need to designate whether the interest, say if you get $10 of interest, whether that $10 is going to be reinvested in the balance of your investment, the cash balance of your investment, or if it's going to increase the cash in your primary checking account. So for ours, we're going to say that this is going to reinvest interest, but this can be changed later. All right, the areas, we've got some read-only fields here, but we have three other areas we can input information. The interest rate that you input here, it's optional. If you leave it at 0, it's not going to affect any calculations. Or in fact, if I were to accidentally put in a large amount here, like 99% interest, it's not going to affect any calculation in the UAN system whatsoever. It's actually just for some reports and some reports that you might print related to your investments. It's for those purposes. But it doesn't affect any calculations in UAN. So it's really not a required field. And if you want to leave it blank, you can. In our case, we're going to put in a nice little 2% interest rate. And then we'll select our purchase date for this investment. We'll just put in today's date for our exercise. So you need that is a required field, your purchase date, and then the maturity date is also required. That has to be after the purchase date. Makes sense. You can't mature before you actually buy the purchase the investment or open the investment. So we're just going to pick a date in the distant future here, and for our example. And then you need to identify the bank information. Well, let's see. Our example is the Go Bucks Bank. Where else would you open an investment? At Buckeye Township. And then, of course, you would fill in the address information, contact information, etc. if this was a real life investment, or it makes sense to. But that's not the only required fields. Are the highlighted fields, and we can see the name. However, again, this is a very important field here, the multiple funds pooled one, because once I save this, I'm not going to be able to change that. So I'm going to go ahead and save this investment. You can see in the background that it's been saved, been added to my list of investments. And then I'll close the form. I can print a report. I'll say no for purpose of a class. And then I get this message. Open the investment transfer form to transfer money to the new investment. Well, remember our Buckeye Township story. We got some money for this cemetery bequest, Hayes bequest. And so far, though, we don't have any cash in that fund. We haven't reseeded that money yet. So at this point, there's no money to transfer from the Hayes Bequest Fund, so we're not going to open the transfer form, but we could. So we could jump to transactions at this point and transfer the money directly into this investment, or we can do it later. So we're going to do that later, and when we get to that transaction lesson, we'll go ahead and do that. So that closes the form, and now we can see the Hayes Bequest Fund investment. If I go back in there, click on Edit, you can see that it's grayed out. I cannot change this back to a fill in and change it back to pooled investment. So if you make a mistake here, your only option at this point would be to close this investment, which will show you how to do that, and open it up as a new investment in the UN software. And when you open it up, mark this correctly. All right, we can see that a fund must be designated because this is a non-pooled investment, but so far we have not picked a fund because we haven't transferred any money into this account yet. So everything's zero and blank at this point. All right, so remember we're dealing with an existing township that has been on UAN. And remember from our Buckeye Township story, we had a sewer replacement project from 2010, and that's complete. The only thing remains for this year is that we have to make one final payment. That was expenses were encumbered in December 2010, but we haven't gotten the invoice for that yet until 2011. So we're going to make that payment, and to make that payment we need some money. Currently, if we look back at our fund status, most of a large portion of our money is tied up in this non-pooled investment. Well, remember, everything gets paid out of the primary checking account balance. So later on when we go to transactions and try to make a payment for that sewer replacement bill for that project, it's actually going to be, I think, for about $250,000. And currently we've got only $100,000 in our checking and in our checking balance in the sewer replacement fund. So we need to do something about that. And we're going to do that, make that payment soon, so we don't really need this investment anymore. We're going to close that investment. Project's over. We're ready to make our payment. So that brings us to exercise number 2 in our book on page 33. We're going to close the sewer replacement investment. And to do that, make sure that you click on the Close Item button, not the Close button. This Close button actually closes your investment area, just like clicking the X here. So if I click on Close, all I did was close the screen. So I need to go back to Accounting, Maintenance, Investments, open it up again. And what I'm intending to do is actually close this investment. And what happens when you close an investment is that it's going to move that money from your primary checking account back to, from your investment back to your primary checking account, whatever balance remains. So I'll go to close this item, this investment, and it gives you a little reminder message. It says all final interest must be posted before closing. Well, why is that? Well, once I close this investment, and this is an important message because you can kind of get messed up on this. If you don't get your bank statement, your investment statement showing that until later, showing that you earned, $20 of interest on this investment, if you've already closed it and you want to reinvest that interest, in the investment and have that on your reports, you're not going to be able to do it on a closed investment. You would have to, you could still get the money in the UAN system as a different type of receipt, but it would not be recorded really in the most proper sense as an interest receipt after you've closed that investment, and it may complicate things a bit. So it's important that you wait to close this investment in UAN before you, until you post all the interest on that investment, related to that investment, to your system. So I'm going to click OK. I'll assume that we have posted all the interest for this, and it opens up this Close Investment form. Now notice most of our fields are in the color of the background, meaning they're read-only. I can't make any changes here. Can't type over it. There's only a couple of them that I can make changes to. Notice this shows me my $200,000 invested as a non-pooled investment, but I can't change that. The only thing I can change is these three fields: the close date, the closing price, and then the type of close. Well, let's look at the close date first. We're going to change this to today's to date, so we'll just say we're closing it as of today. And then the closing price. Well, in our overview, if you'd like to read that, it explains, and if you press Need Help, you can find a more extensive overview, which explains that if you have the ability to change this price. For most of the UAN customers I've encountered, township villages and libraries, this hasn't been very relevant. Normally, what you do with your investments is you post interest, and if you reinvest that interest, that would be taken care of when you post. It would increase your balance, your closing price already, whenever you post those interest receipts and reinvest them into the investment. So that change from the time you open the investment, the time all that interest accrued would already have adjusted this dollar amount. So there'd be no need for that. The certain investment utilities, I think, which is a bit rare for the customers that I've encountered in UAN, you might have a capital gain or loss on the investment. If you have a capital gain or loss, you would change the closing price here. And in UAN, if you look at the explanation, it's going to record, if you change that closing price, it will record a capital gain or loss, and you can read through the details on that there in that explanation, and probably some more detail in the if you were to click on the Need Help button. All right, so back to our investment. We're not going to change the closing price in any of these. So really the only other thing we might change is the closing type. Here you have two options: transfer the balance to the primary checking account, or roll over the balance to new investment. Well, we'll look at this in exercise number 3, the rollover investment. But we're going to choose this, transfer it to primary checking. So this has $200,000 invested if you notice that, I don't know if I pointed this out before, on the screen it always gives you the estimated primary checking balance. And so here we're showing $221,800. If I look back at my fund status report, well, that's what we have in the primary checking, $221,800. So if you watch what happens when I close this investment, it gives me a little message saying, well, the investment is now closed. The balance was transferred to your primary checking. Do you want to print a report? I'm going to say no. And if I go back to my screen, I can see it went from $221,800 to $421,800 in my primary checking. It updates about every 10 seconds. So if you don't see it update, you might blink and it'll update then. All right, if I go back to my fund status reports and print an after report, I can see, select all again, I can see that it's now, zoom out, zoomed in a little bit too much there. I can see now that that's affected my fund status. Before I had, actually the before report is right here, before I had $200,000 in the sewer replacement fund. The fund balance was $300,000 total, and then my checking was $100. And the after, the entire amount is now in the checking balance, and you can see that my checking balance increased on this report as well. The fund balance, no change whatsoever, so I'm just moving this between the non-pooled investment to my checking and pooled investments, all the pooled cash. All right, so that's what happens when you close an investment, a non-pooled investment. Well, in our next example, number 3, on page 34, I'm going to roll an investment over. We're going to pick on the Money Market 1 fund here. So I'm going to close that item. Same message about interest. I'll click OK. And the screen looks identical. I'm going to choose today's date. I'm not going to change the closing price. It's $5,000. You can say the interest accrued on this one throughout the years was $200. And this time, you would use this rollover balance into new investment if, for instance, at the bank, it's just the type of investment you have. The bank allows it to just roll over after a certain period, and you don't really need to make any changes. This $5,000 will be reinvested into some other type of investment at that same bank. Well, the only reason to use this is it'll save you some steps. If you did not use it, if you closed this investment and transferred it to primary, that $5,000 would increase your primary checking balance, and then you would need to add another investment, set up all the investment information again, and then transfer go to your transactions and transfer the $5,000. Using this option saves you a step, since it's all going to be, since that $5,000 is all going to be in the same investment, or I'm sorry, it's all going to remain in your investments. Let me close this reports for now. Then there's no need to do all that. You select Rollover Balance to New Investment, click on the Close Item button. It says, note, this investment will be closed after, or should say only after, the rollover investment information is saved successfully on the following form. So when I click OK, for some reason it opened up my screen here. When I click OK, you can see that form is still open. If I were to close this without saving, my Money Market 1 would still remain in place. In order to roll over the investment, I need a unique account name and a unique account number. So I'm going to call this Money Market 2. It's unique from Money Market 1. And then, let's see, in my book, we've got an account number. So we'll say this is an account number at the bank. 8675309. And then that's all you really need to change. Now, of course, your maturity date does need to be, it needs to mature past the current date of the new investment, which would be August 31st. So that's well past that. So that would have to be adjusted if the old investment expired as of today. But that's the only other required field. I'll say that this is 2%. It's non-required, but I'll go ahead and include that. And again, once I fill out the information that I can fill out, then I'll save this new investment. I could print a report if I wanted to. And now we can see that the money market 1 disappeared, and now I have money market 2. Nothing changed with my primary checking account balance. It was all pooled investment, and actually nothing changed on my fund status report whatsoever. If I were to print that again, too much there, too much. Absolutely nothing. This is a money market, so don't be fooled by the 5,000 here. But nothing actually changed on this report. It was a pooled investment. It's still a pooled investment. It's just a new pooled investment, so it's part of that 15,000, and it's still part of this, made up of all of these pooled cash balance in the 436,800. Now notice that by default this screen only shows my open investments, but if I click on the status filter, I can see my closed investments as well. There are also some reports that filter that out as well, so in reports you might go to filters if you want to view the information on your closed investments. All right. Now, that's the end of our exercises. If I were to close one of these investments like the Star Ohio or the money market, notice that the only thing that would change here, since this is a pooled investment, the Star Ohio, there's no fund designated. The only thing that would change on my fund status, I'm not going to close this one. I actually should have, yeah, no. I won't close this one, but we got $10,000 in my balance. If I were to close this investment and this money market, it's got a $5,000 investment. That's my total of $15,000 in pooled investment cash. Well, under the fund status, if I let's say I did close both of those, it would not. The only thing that would change here would be my pooled investments would be reduced to 0, and my available primary checking account balance would increase to $436,800 if I closed both of those pooled investments. And that's it. Nothing would change here under the details in any one of these columns, because those investments are pooled with the cash in all funds. So it really would just affect my primary checking balance and the pooled investments here. All right, so I believe that's all I have for investments. When we get to receipts, we'll touch on how interest receipts affect your investments once again. But now we'll move on to Chapter 3, Accounting Transactions.